But let's get back to the equity markets. Thermax is one stock that's up 7% on the back of a decent set of numbers. In fact, the numbers came in above street estimates. The order inflow came in at around 1,500 crores and that aided the recovery. We have the management, Ashish Bhandari, who's the MD and CEO of Thermax, who joins in now to take us through what the way forward could look like. Ashish, thanks so much for being with us. Can you start by telling us what the impact of the COVID-related restrictions has been on demand as well as on execution?
Hi, Lata and Sonia. A very good morning to you and to all your viewers. Pleasure to be here. I think if you're talking about the COVID impact, it's primarily been in this current quarter that we are going through. Yeah, so until March, execution was on schedule. Overall factory productivity was starting to go up. And some of the later months, especially February and March, were our most productive months in quite some time. It's end of April that the second wave impact started to show up. And it's in May that the impact has been at its highest. Yeah, May. And I do think June, while recovery will happen on the expectation is that the recovery will happen on the revenue side, which means a backlog, we should be able to start working on it again. On the demand side, we see good strength in the large projects. I think the person who was here before me was talking about how cement, steel, a lot of the larger industries are starting to invest again. We are seeing that. But this time around, unlike what we saw after the first wave, where we saw demand recovery across all of India, we don't see that right now. And that could be because of the second wave was a lot more prevalent all across India. So whether the recovery is broad-based or not, only the next few months will see. Overall, none of our factories shut down. The productivity came down by about 30% on average. But we continue to work through the entire late April and May period.
Yeah. Ashish, you can hear me?
Yes, I can hear you.
All right. I wanted to ask you about the order balance. It's about 5,227 crore. But if you can give us more nuance, people who place orders with you will look beyond the quarter. They will look at life beyond. Are you getting a sense that people are fairly confident of life after June?
Look, I would say there it's as clear as mud, and I would say that in a good way. Yeah, last year when I would continue to compare it after what we felt after wave one. After the first wave, it was very clear that the demand recovery was starting from food, pharma, chemicals. Yeah, almost a good majority of our orders were coming from these three segments. In Q3 and Q4, we started to see segment recovery across all of these segments. And by Q4, the cement industries were going through waste heat recovery, sponge iron plants were going through expansions of various different kinds. And what we are seeing now is that some of those larger projects that many of these companies started, they are all going ahead. Yeah, but that broad-based recovery that we saw across all of India, that I can't say with confidence that we see it right now. Okay. Yeah, so I hope I answered your question.
Yeah,
that does not mean that demand does not exist. We just have to wait for the second wave to die down a little bit, and only then we will be able to see.
Okay, that's as comprehensive as it gets, Ashish, considering our blurred visibility. But if you can tell us at the moment, what is the breakup of this 5,227 crore of orders? Which sectors?
So right now, actually, it is the broadest based segment recovery that we have had. Yes, so we have orders across all of our segments. I actually cannot say a single segment which has been particularly strong, which is the good thing about this recovery. We have got orders from food, pharma, chemicals, textiles. Now oil and gas and refining is starting to show up, and then of course chemicals and steel as well. If I had to say, as I look forward, which are the segments that look particularly good, I would say steel in particular looks better than some of the other segments. But right now our order balance is across all segments. The second thing I would say is that a good chunk of our orders relate not just to greenfield projects, but even brownfield projects, with many people looking at sustainability, improving energy efficiency, and investing in projects that do not necessarily align with capacity enhancement. They align with OPEX reduction and energy efficiency as well.
Okay, these are really optimistic statements coming in. You're saying that orders are coming through across all segments, whether it's food, pharma, chemicals, textiles. But on the operational front, any kind of impact because of the sharp rise in input costs? I mean, steel, copper, aluminum costs have all gone up. What would the impact be on gross margins?
I think significant impact, I would say. Even in Q4, we had to the tune of 10 crores plus of an impact on our top line because of steel price increase, because of commodity increase, in the case of our chemicals business, increase in styrene as well. As we look at April and May, both those months have been challenged because while commodity prices have continued to go up, capacity utilization at plants has gone down, and we have had additional costs because of COVID, and in many places working at customer sites, the cost of execution has gone up quite a bit. In some of these cases where we are taking in new orders, our prices are also going up, and I do think prices are going up across the board because the kind of commodity price increases we are seeing, we have to pass them on to our customers. It's also putting a lot of emphasis on digital, on efficiency, making sure that we are as lean as we can be. The last thing I will say is that during the first wave, many companies, including Thermax, we had picked up some good habits in terms of cost control, in terms of really managing the bottom line well. We have to make sure that some of those good habits continue, even as our order top line and our top line goes up, because it's managing those good habits which will help us in the coming quarters to manage some portion of this commodity price increase.
For the moment, metal prices are lower, and that's pulling the entire market, stock market, that is a little lower. So I don't know to what extent it's going to last, of course. Ashish, you referred to the execution challenges. So that's exactly what I wanted to ask you. Any details that you can share on labor shortages? How much will you be able to execute of this 5,220 crore order book in the current year?
I think Q1 will be challenged for sure.
Labor is a problem?
All the challenges I talked about. Labor is a problem, not just that migrant labor has kind of left or anything like that. Overall, in trying to operate sites as carefully as we can, we are doing 100% RT-PCR tests. We are taking all kinds of precautions, but automatically that means that that nearly 25 to or plus % of your people are not available at any given time. Plus we have got plants in Dahej where we have just gone through the cyclone, so we have had an impact of that. There's been shortage of oxygen supply, so you've gone to alternate methods. But all of those ultimately reduce your capacity utilization. Q1 will be tough. I do think in the later parts of the year we can recover if we don't see a very strong third wave or anything.
Okay. What is the capacity utilization? What is your guess for the year?
For the year, I think it's anybody's guess.
Okay, for now, what is it?
Incorrect to say. Right now, I would say we are in the 65 to 70% range of what we think we would like to be relative to what we have in our order book.
All right.
As I said, I think if things improve, we can ramp up. And February and March, we had very high capacity utilization across many of our plants.
Okay, got that. When you say very high, what do you mean? 85, 90?
I think 85, 90, but with debottlenecking, we can increase even further. Okay. So if the economy has got one more gear to give, Thermax too will find that gear within.
Okay, that's good to hear. Ashish Bhandari, pleasure speaking with you. Thank you very much indeed for joining us.
Thank you very much. Wish your viewers a good day. Thank you.
Okay, so that's Thermax, and you'll see the past 5 years financials running past for you. The revenue bar chart is coming up, and understandably FY21 was a problem here. The EBITDA and the profit after tax will follow. A quick break, and we are going to be inviting another management, Rajiv Rajgopal.